Hey everybody, welcome back to the channel. Today I'm going to start a new series called Dividend News You Can Use. This will be a weekly, quick hit summary of the market and upcoming dividend news so you can get the info you need and move on with your week. No fluff, just the dividend news and about 10 minutes. So let's go. Overall, the market had very strong results this week with the S&P 500, the NASDAQ, and the Dow all up over 2%. Friday was a very strong day, which helped out the overall week. Hopefully everyone was able to take advantage and saw their balances increase this week. Some notable dividend stocks and funds that had interesting weeks was SCHD at plus 2.7, GGRO at 2.38, VYM at 2.44, Noble, which is the Dividend Aristocrat ETF, at 2.90, and V&Q Vanguard Real Estate Fund up 4.28%. So all five of those beat the overall market this week. So congratulations to all my dividend ETF holders out there. Some individual company news. Apple had a fantastic week at 3.91% increase. And as you probably heard on the news, the market cap of Apple went over 3 trillion for the very first time. It's the first company to have that type of market cap. So again, congratulations to all the Apple shareholders. Hopefully this momentum will continue and the dividend increases will continue as well. Coca-Cola, KO, had a very different week with a negative 1.60%. And that's based on a report that came out saying that one of the ingredients in their diet sodas could cause cancer. So we'll see what happens in the long run, but the market definitely turned sour on that particular stock and went down for the week. Home Depot was up 3.27%, which is a good indicator on the strong economy. Home Depot and Lowe's are some of the first companies to go down if the economy is struggling, because people aren't going to renovate their houses or buy new houses when the economy is struggling. So to see a positive week with Home Depot is good to see. Same with Caterpillar at 4.95%, which is fantastic. It's over double the overall market. Again, people won't be using the big equipment that Caterpillar offers if they think the economy is in a downturn. So seeing a strong positive week is good there. Pfizer had an opposite week as well, as down negative 4.23%. And that's mainly on the COVID vaccines not being used as much anymore, which is affecting their top and bottom line. So it'll be interesting to see if they can use their other drugs to make up for the downturn in the COVID vaccines, but time will tell. I'd like to take a look at each of the sectors of the S&P 500 to see which sectors of the economy are going well and which ones are not so much. So you can determine if there's a purchase you're looking to make in a new stock. It could be something to look at to see which sectors or which industries are negative, and maybe you can find values there. So communication services, consumer discretionary, consumer staples, healthcare, industrials, and utilities are all up for the week. And energy, financials, real estate, and technology, as well as materials, were down for the week. So again, if you're looking for some interesting entry points, those might be the categories to take a look at. Since we're at the middle of the year, I also wanted to take a look at the year-to-date numbers. And it's very interesting to see how different the market is depending on which sectors you're involved with. Communication services, consumer discretionary, and technology are doing fantastic this year, but all the other sectors are having a very rough year. So if you're overly focused on those other sectors, you might actually be down for the year. So it gives you an opportunity to take a look to see which sectors are not doing so well, and maybe you can find value in those sectors. Another thing I like to look at is investor sentiment. And there's two main ones that I like to look at to see how the overall feeling of the market is going. The first one is the CNN Fear and Greed Index, and it shows a weekly summary of the investor sentiment. Right now, it's an extreme greed category, and over the last month or so, it has been increasing. But it's interesting to see how a year ago is an extreme fear. So it's interesting to see how the market sentiment changes over time. The other one that I like to look at is AAII.com's member survey of the sentiment of the market over the next 6 months. And over the last couple of weeks, as you see, the bullish sentiment is about 42 to 45% is bullish, but that is higher than the historical average of 37.5. So again, it shows that overall the market is bullish on what's going to happen in the stock market over the next couple months. So it's good to take a look just to get an overall feeling of how the market is handling things. And economic data this week, with the short week with the July 4th holiday, a lot is happening after that. So on July 5th, we're going to have the ADP employment numbers, and they're forecasting 220,000 new jobs were created. We're also going to get the minutes from the Fed's June FOMC meeting. If you remember, they decided to hold interest rates steady during that meeting, but they also forecast 2 additional increases this year. So by looking over the minutes, we'll be able to get a sense on the feeling and the discussions that they had on the future of the economy. On Thursday, we're also going to get the U.S. initial jobless claims, which is forecast at 246,000. We're also going to get a report on the job openings for May, which is forecast at 10 million. Both of those figures will weigh heavily on the Fed's decision on whether to continue to raise interest rates or not, because one of their mandates is low unemployment. And so if the unemployment continues to be low, the Fed might feel like they need to increase interest rates in order to slow down the economy. On Friday, we're going to get the official employment report for June and a forecast of 240,000 new jobs, as well as the unemployment rate is forecast to be 3.6. So if those numbers come in different, it might affect the market in the short term. All right, so on to dividend stocks in the news. So one of the big important ones was in the financial sector this week. We had the annual bank stress test, and all the major banks passed the stress test. And so that was very positive to know that if the economy tanks, all of the major banks will be able to survive during that downturn. After the results of the stress test is when the banks all announced their dividend increases. So there's been quite a few that have been increased this past couple days. So the JPM came in at 5% increase, Morgan Stanley at 9.7%, Citi at 4%, Wells Fargo leading the pack at a 16% increase. Bank of New York Mellon came in at 14%, sorry, and Goldman Sachs came in at 10%. Interestingly, Truist Financial decided not to increase their dividends, so we'll have to wait to see if they decide to increase it in the weeks and months coming forward. Other dividend stocks in the news, according to Wall Street Journal report, Starboard Value, which is a hedge fund, has taken a large interest in Algonquin Power, ticker AQN. And what they're hoping for is for the AQN managers to divest of their renewable energy business in order to focus on the traditional utility business. They feel like this will provide better value and allow the stock price to increase. If you've been following AQN over the last couple of months and years, you know that it's generally been negative. And so hopefully this will turn around the company if they decide to follow what the hedge fund is asking for. Other important news is Microsoft CEO came out the other day saying that he forecasts their revenue to get up to $500 billion in the next 7 years. So that's a huge increase from the current revenue of $207 billion. So if that is the case and they're able to do that, it should increase the stock price of Microsoft as well as provide additional room for dividend increases. So hopefully that can come around, but we'll have to wait to see if the forecast is correct. I'll also be talking about earnings. And so this particular week, there's no notable earnings coming up because the earnings season for Q2 really starts happening the week after. It's usually kicked off by the major banks. So on next week's report, we'll talk about the earnings reports and how each of the companies in the dividend space are doing. So there's some upcoming ex-dividend dates over the next couple of days. So if you want to take advantage and get the current dividend that's going to be paid, you have to own these shares before the dates listed here. So for Comcast, Hannon Armstrong, and Bank of Nova Scotia, they're going ex-dividend on Monday. On Wednesday, you have Campbell Soup, Cisco Systems, and JP Morgan Chase. On Thursday, it's American Express, Bristol Myers Squibb, General Dynamics, Main Street Capital, MasterCard, and NetApp. And on Friday, we have AT&T, Darden Restaurants, General Mills, Intuit, McCormick & Company, Micron, and Verizon. Again, you have to own the shares the day before the dates listed here in order to get this dividend. And last, I want to talk about an undervalued stock of the week. So valuation is very important to me, and so it's always something I'm considering. And this week, I want to share about Bank of America, the nationwide bank and financial institution. Currently has a current yield of 3.14%, but their historical average yield is 2.22%. So looking at that calculation, it appears to be about 29% undervalued at this time. Additionally, the current price of Bank of America is $28.69. And the analyst one-year estimate for the stock is $35.72. So that shows about a 20% upside to the current value of Bank of America. So if you're interested, it might be something to add to your watch list, and this might be a good time to take advantage of it and buy some shares. So thank you for joining me today on this weekly dividend news review. Hopefully you enjoyed the information presented. Please like and comment on this video if you have any feedback, and please share it with your friends. And I look forward to seeing you in next week's video.